Hello, everyone. It's Michael Ogechi Abbey with Enterprise Express Tax Service again. Uh, so, the reason why I'm doing today's video is because uh, we get a lot of our clients who ask us this question. They say, well, Michael or Mr. Michael, whatever, how can I prepare myself better for the next tax season? In other words, what they're really saying is, what can I do to make sure that my situation or my tax situation is better next year or the year after? All right. So we're talking about the main thing we're talking about here, and many people might have heard this term because it's become a, let's say, just become a new thing in the tax industry, is tax planning. The truth is, tax professionals, be it CPAs, or just general accountants, we've been doing this for ages. It's pretty much what we do. It's pretty much what we're supposed to do with our existing and new clients. But it's an invaluable process of preparing yourself and preparing your tax preparer so that you both have a successful tax season, or let's just say that both of you achieve the goals that you need to achieve. All right. One of my goals as a tax preparer, well, my goal is to ensure that you come away, you being my client, come away feeling that I have given you my best, both in terms of advice, in terms of professionalism, also in terms of the output. Now, whether that output is a big tax refund, or whether it's lowering your tax debt, or whether it's giving you the required advice that you need so that you are on a better course in terms of your tax planning. All right. And I'm going to be mentioning this a lot in the next upcoming videos, the term tax planning, because I think it's one of the most underrated things between the tax professional and the tax customer. A lot of times, what we tend to see happen is, the year starts 1st of January. We both, you, the tax customer, and me, the tax professional, starts just thinking about the tax season. All right. And then, you call me, we book a date, you come in, or you upload your documents to my portal, and we get going. And the taxes are prepared. I explain it to you. You may like it, you might not. We've been working together for a while. We sign off on it. Boom, that's done. We move on to the next year. In most relationships between tax professional and tax customer, there is usually little or no tax planning unless it is planned. All right, and that's what I'm going to talk about now. What you need to do, what both of us need to do, because I'm not giving the tax professional a free pass on this. All right, there's equal responsibility on your tax professional to ensure that he or the company initiates or at least proposes a meeting. All right, and this meeting, the timing of this meeting should really be the beginning of the tax year. So say like in January. I know it's busy, but that's a great time while you are meeting to prepare your client's return. That is a great time to discuss what they need to do to be in a better position the following year. It's also a great time, since you're preparing their taxes at that time. Now I'm talking specifically to tax professionals, to evaluate what's going on and maybe make enough notes, and right after you do the return, make the suggestions that you need to make so they are in a better position next year. I never used to do this. I'm just going to be candid and honest. When you're starting out in business, your focus is on making the money, making enough money, because just our tax professionals, just like other business people, the goal is to keep the business afloat, make money so you can pay your bills and keep growing the business. All right. But after a while, I decided, I said, you know what? I have a responsibility to ensure that my client, that they are in a good position the following year. My goal is to ensure that with each year you are getting better, especially from a tax perspective. All right. And sometimes that might mean, if you have to pay off tax debts, then let's get a plan to pay those tax debts off. If there are returns that have not been filed, back returns for years, let's get together, make a plan so we can get those caught up. If there is money outstanding, tax debt, I just talked about that. But again, there's always a way to make a plan so that me and you, can get to a point where we're in a much better position than we were 2, 3, 6 months ago or last year. All right. All right. So here's another thing that I'm going to mention. A lot of times, especially, I may have clients come in and say, well, why is it that I'm owing every year? Or why am I not getting a bigger tax refund? And what tends to happen is taxpayers do not always take the time to look at their tax withholdings. This is real easy. It's very easy, very simple. The IRS has a calculator out there that will aid you in calculating how much you should expect, or how much taxes you should expect to be withheld from your paycheck, so that you will not owe at the end of the tax year. And the reason why I say it's easy is this. If you say earn $96,000, that's your take home every year. The tax calculator will tell you, based on your unique circumstances, if you're married, single, filing, married, filing, joint, 2 kids, it will tell you exactly how much taxes you should expect to be taken out of your paycheck so that you will not owe money. All right. And that's the beauty of that tax calculator. And so you can now look at those results and say, okay, looks like I need to adjust my withholdings, my federal and or my state, or both, and or my state withholdings, so that I'm either even, or I'm not going to be owing as much, or if I adjust my withholdings just enough, I'll get a much bigger tax refund. And you can do this if it's a bit confusing. My advice, do this with your tax preparer. Sit down with them and say, let's take a look at the tax calculator. Let's take a look at my tax, my tax bracket. Okay, everyone falls into a certain tax bracket based on their earnings, based on their unique situation, their filing status. Okay. And so that tax bracket will now determine how much taxes you should expect to be withheld from your paycheck every 2 weeks or every month, as the case may be. Yeah, I'm talking a lot. Another area that I also want to pay some attention to is retirees. Those who have retired, no longer with federal service now, or no longer with the state, service, or just retired generally. All right. So you've retired, you're drawing Social Security, and you have your retirement income, maybe a pension, and then you have something else coming in. Okay. You'd be surprised how many retirees expect that taxes after retirement is going to be way lower. Why am I paying so many taxes? After all, I'm retired. I get it. I mean, that logic might dictate that should be the case, but unfortunately, it's not the case. As a matter of fact, when you're retired, because sometimes you have different sources, you probably have to do a little bit more planning, tax planning, so that you're not, you don't come off, the wrong end in terms from a tax perspective. All right. So you want to check, again, the rates are different because you're retired, but you want to check with your tax professional what taxes are being taken out. I've seen cases where federal taxes are taken out, state taxes are not taken out for whatever reason. And so they end up owing more state taxes. So if you're a federal government employee, you definitely want to check with OPM if they are taking state taxes out, and if they're not, then you now might have to pay state taxes yourself so that you're caught up. Or if you decide to leave it that way, just know that you're going to get a state tax bill and prepare yourself to pay that state tax bill. Again, if you're taking Social Security in conjunction jointly with your retirement income, then again, you also want to get together with your tax professional, because Social Security will start taking taxes after a certain income threshold. All right, and that threshold is, it just depends on how much your joint income is. So when you join whatever other income you're getting plus Social Security, if it goes above a certain threshold, then you will pay some Social Security taxes, not all Social Security taxes, but some. Okay, so that's important. You want to check that out. You want to research that with your tax professional. You also want to discuss with your tax professional, and sometimes this is necessary, sometimes it's not. You do have the option to elect to have federal taxes taken out of your Social Security income. Now, I would usually only recommend this when your income is at a much higher level and Social Security is taxing you. Then you probably may want to think about having Social Security taxes deducted from your Social Security income. Okay, so as you can see, we probably talked for, I don't know, I'm looking at my timer, it's at least 12, 13 minutes. Now, there's a lot more to this to discuss, and I've just skimmed the surface. So tax planning is essential across the board, and you and your tax professional want to make enough time together to sit down. If you're the tax customer, make a list of the areas where you might have concerns and you need a little bit more information. Remember, we're now in an age where all this information is really online. So there's no one who's really in the dark. What you're really doing is confirming the information that you have with your tax professional and then setting up a plan to execute and implement the things that you both agree on. Remember this, your tax professional is not a certified financial advisor unless they are. Okay, unless they are also a certified financial advisor with all the certifications. But most times, most tax professionals are tax professionals. They're CPA, they're accountant, they're IRS certified enrolled agent, and they will most likely most of the times want to stick to the tax area without getting into giving you financial advice. I've come across many situations where clients assume that because I'm a tax professional, therefore I'm qualified to give them financial advice on stocks and things like that. And that's not quite the case. Now, tax professionals do deal with certain tax vehicles like the IRAs and all that, but it's purely from a tax perspective and not from a perspective where we are qualified to give you advice in those areas. All right, so that's something you definitely want to look into. Now, I have had situations where some of my clients will maybe get me on a joint call with their financial advisor, all right, because they want my opinion on from a tax perspective on maybe an IRA or a Roth or something like that, and that's perfectly fine. Okay, so again, this is all under the umbrella of tax planning, which is why I say tax planning is absolutely essential. Okay, so once again, this is Michael Legacy Abbey. A bit of a long one today, but I felt it's necessary, and this is an area that I'll be talking about as we continue to move along. Well, have a great and a blessed week. It's a Monday. Remember, if you like the content, subscribe to the video, subscribe to the channel. We are growing the channel, and we hope that the information that we give is relevant and helpful. Michael Legacy Abbey with Enterprise Express Tax Service, office based in Bowie, Maryland, but we do taxes all over the United States of America. Bye.